Hey, what's up, everybody? It's Andrew Cady, Epic Mortgage Guy. Happy Friday, January 31st, 2020. I can't believe January's already coming to a close. This has been a power-packed week in the markets and for housing data and all sorts of data that has affected our markets. So let's roll through your market update for the week of January 26, 2020. Let's start off talking about the stock market. Stock market has seen massive swings. Just as of a few minutes ago, we're down nearly 500 points on the Dow for the day. We're seeing swings where it's been up and down 500, 600 point swings from the highs to lows of this week. Absolutely wild ride in the stock markets. Now, what's causing that? Honestly, there's not a lot of factors involved with it, other than there's a lot of fear put into the market right now by the coronavirus. They officially announced today that there is the first case in the United States of human-to-human passing of this virus. Obviously, this is a very big deal. We hope that this thing slows down and quelms and goes away, but it's something that is impacting our stock market, so it's worthy of talking about. Let's get into some of the news that came out this week. New home sales came out for new construction. Now, they were down, this would be for December of last year, they were down 0.4%. Not a big move down, and especially considering how tight inventory is and that it was December, it's not really alarming at all, because when you look at it on new construction sales, it's still up 23% year over year. Phenomenal increase. Home appreciation index came out year over year, November 2018 to November 2019. Homes appreciated at 3.5%. That is up from 3.2% the previous year. So home appreciation is staying very strong. The Fed also held their meeting this week. They maintained interest rates, didn't raise, didn't cut the Fed funds rate, but they did mention after the meeting in their press conference that they're going to be continuing to buy US Treasuries at a rate of nearly $60 to $100 billion a month. Now, if you haven't known that's going on, that is what's been going on for quite some time now. Again, they relaunched it, and they're basically stimulating our own economy by doing it. Now, with the Fed continuing to do that, it's just basically pushing our stock market further. And if this whole scare with the coronavirus and things going on wasn't there, honestly, our stock market would be on a tear right now. Pending home sales came out. Pending home sales has signed contracts for December. Now, this is a great measure of what our market's looking like in the very near future, because these are executed contracts. It was expected to be a gain, and it was a loss. And it was a substantial loss. It was down 4.9% for December. Now, we see the news articles of, housing market hits the brakes, all these things. Now, if this trend continues, obviously that's a problem. But again, record low inventory. It was December, so a little bit of a slowdown could be expected. And when you look at it on a year-by-year basis, year over year, it's still up 4.6% on a year-over-year basis. So not really a cause for alarm right now, but if it continues this trend, that is something we're definitely going to be watching. Mortgage application data came in. That was up 7% last week, which is to be expected. A lot of that's going to be on the refinance side. Year over year, purchase applications are up 17%, and year over year, refinance applications are up 146%. You heard me right, 146%. That is because interest rates today are roughly about 1% lower than they were a year ago, meaning if you're in the market and you haven't looked at refinancing, you really should be looking at it. GDP numbers came out. The GDP came out at a 2.1% growth for the fourth quarter of 2019. Honestly, that's kind of a weak number considering that the Fed did interest rate cuts and they're continuing the stimulus package to boost our economy. We would hope to see that number higher. And if you know, the definition of a recession is when our GDP is contracting for 2 quarters in a row. So right now, we're still positive on it, but that is kind of a weak number. We would expect that to be higher, especially towards the end of the year. A lot of retail sales going on. So we're going to have to watch it and see what goes on there. If that continues to contract, it could spell trouble for the stock market in the future. Last piece of data that came out was initial jobless claims. Came out, revised down to about 216,000. Honestly, it's a little up, a little down. Right now, there's not a lot of fluctuation in initial jobless claims, meaning employers are holding on to their employees right now. Now, it's not to be alarmed at right now. It's a pretty standard number we're seeing. Now, if that number would creep up into the 230, 240, 250,000 initial jobless claims, that'd be highly concerning. So it's something we're going to watch. And every Friday, we're going to do a market update and release the numbers that came out that week. So I appreciate your guys' time. Hopefully your January was amazing. If you guys ever need anything, find me on any social media channel at Epic Mortgage Guy. You can ring me at 904-500-EPIC. Thanks for your time and have a great weekend. Take care.